Hey guys, Akil Stokes here. Welcome back to the Weekend Trading Edge video, your weekly outlook around the markets. If you are a continued subscriber and joiner, thank you as always for supporting the channel. If you are brand new and you like what you see, stay around, hit that subscribe button and check out not just the weekend video, but the Trading Coach podcast and the other midweek sprinkles that I do every now and then. Also, real quick before we hop into the video, at the very end, I've got a really cool example of a very painful and horrible trade that I just came off of this week, but also an even better example of how we need to be able to shake things off as traders and then bounce right back into it. So make sure you watch towards the very end if you want to see Akil in some pain, but also flip it into a very good lesson. So in last week's video, we spoke about a few fundamental releases that were coming out that should give us some clarity on what the market is going to do. And I want to start off by following up on that. Friday was the big day in the markets, right? We had GDP for Canada come out. We had PCE for the dollar come out. Two very important figures, and they give us a little bit more clarity about what to expect going forward. So let's start on the Canadian side. The GDP number came out for Canada, and pretty much it's solidified that a rate cut will be happening on June 5th. That should be a Wednesday. My days are all messed up. I can't believe it's June already. But it's usually a Wednesday, so that should be a Wednesday or Thursday, June 5th, right? So if we go by kind of basic economics on how the market should work, I put that in air quotes because we know that the market will do whatever it wants, whenever it wants. It doesn't have to be rational at all, but a rate cut should equal a weaker currency. So take that information out your brain, put it to the side for the Canadian side. The dollar side is a little bit more interesting, right? Long story short, been saying this all year, came into the year expecting historic amount of rate cuts. News has been coming out. The idea of rate cuts have been pushed back and back and back, less and less and less, to the point where we're at maybe September we may see one, but some people like myself thinking that we're not going to see any in 2024, and even some FOMC members saying maybe we should kind of hike again, right? So it's kind of a mixed bag. And if you're wondering why the markets have been like crazy and weird lately, it's because of that, right? So markets move because of deviation from the expectation. When the markets expect a certain thing, everyone's on board with that certain thing, it's kind of priced in and the markets don't really move. When there's kind of people on both sides and surprise news and some people thinking this way, some people thinking that way, that's when you see movement in the market because half the people are excited, half the people are panicking. And that's where we're coming out with our news, right? So the PCE news was actually positive for a rate cut, which sent a bunch of people scrambling, saying, I knew I was right. I told you we're going to cut. And a bunch of people saying, oh crap, like I thought we weren't going to cut. Maybe I should reestablish my position. But it's only one piece of the puzzle. And overall, I do think the market still has this theme where it's like the dollar is not going to cut until late in the year, if at all. And they're still looking for more information to make that decision. So if you had to kind of balance that against the Canadian dollar, where it's like we are cutting in a few days versus we might cut later in the year, but maybe boost, I think we can overall say that we're going to see a stronger dollar in comparison to Canadian dollar. So where does that put us on the charts? Well, let's hop in. We're going to start on the weekly here on Dollar Canada, the loonie, and take you all the way down to the hourly and kind of show you how everything is actually lining up. So if you look here on the weekly, right, we have been in a period of consolidation pretty much since the end of 2022, right? We have a low floor right here. We have a high ceiling right here. And we've been range bound since, the high here, October 10th, right before my birthday, 2022, going up and down and up and down and up and down, right? We know that the markets consolidate for the majority of time, so this is no surprise. But we also know that contraction leads to expansion, right? So imagine the markets being like a spring, right? When the markets spring together, tighter and tighter and tighter, eventually that energy, if you're a physics person, you know the technical terms for this, that potential energy, don't make fun of me in the comments, right, has to be released, and boom, it explodes out. So eventually we should get some type of breakout from this pattern formation. So keep that in mind, because if we do break out to the upside, you can see that we have a lot of room going higher up to 142s, 144s. We can worry about the specifics of that later. Now, if we go one step down to the daily, you're going to see another consolidation pattern. So weekly consolidation pattern, ding. Daily, another consolidation pattern, ding. right? This is going to be in the form of a flag, right? We have an extension going up right here, and then we have basically a downward slanting channel where once again the market is bouncing from one extreme to the other, but this time doing so in a downward direction. So it's kind of like a pullback. Now, we spoke about this last week with the New Zealand dollar. Is this flag pattern in the best location? Not for me. It's right at structure. I would prefer that it is above structure, but I'm very picky. But the point is that this is a traditional kind of bullish breakout pattern here as well, right? And again, if we're thinking, well, let's save that for a little bit later. Let's go one more time frame down to the 4 hour. In the 4 hour, you can see, we'll make this short and simple, that we came down to a previous level of structure. We bounced off of previous structure resistance up here, made our way all the way back across the range, little hiccup here at inside structure. And now we're back at the bottom of the range right here, holding at the end of the week. And if we look at the hourly, you're going to see that we came down here. We have a nice little double bottom. So if you're someone that is looking at this from a technical perspective and you're seeing the hold of structure, if you're someone that's looking at this from a fundamental perspective and you're saying, okay, I want to be long dollar, I want to be short Canada because of the information that I gave you earlier, you're in a pretty decent level on a whole bunch of levels, no pun intended, I guess. But you look at this right here where you have a nice entry point for a trade. Hold on, sneeze break, I gotta mute it. I love the power of editing versus doing it live. You don't have to see my ugly sneeze face, right? We all got ugly sneeze faces. Don't act like I'm the only one. I'm pretty 99% of the time, but I have my one ugly moment. It's okay. Nobody's perfect. Just very close like me. Anyway, so you can see price action is trading at a lower level of structure. Now, do keep in mind, we do have an underlapping level of structure. These levels of structures are going to be more important. I preach this all the time, but the point is we're trading at a low here. If you're expecting a bullish move, you have a massive amount of room, not only to inside structure or our most recent outside level of structure here, but also across the range. But also remember, going up to the higher time frames, that goes in line with the flag breakout, and even higher time frames, that goes in line with kind of the bigger potential breakout of this level as well. So if you are a short-term or a long-term, if you are a technical or a fundamental trader or some type of weird combination of both, you've got a lot of signs here on the loonie, dollar Canada, pointing towards bullishness. Next up is pound dollar. We're going to keep this a little simpler, right? Quick analysis. Pound dollar was or is a pair that has, well, had multiple patterns setting up. We had one complete on Friday. Let's jump down to the hourly real quick. I'll show you that. It was a nice little advanced pattern formation, a little hoop to hoop, and then a hip to hip, and then a hop to hop, and then a boom to boom. This was a Gartley pattern. This initial leg right here is going to be our X leg. This low is going to be our A leg. What we want to do is we want to take our Fibonacci retracement, and I will do this all again in a little bit. Don't get worried. And we want to see what does that next retracement come to. That's going to be our B. We hit the 127. We do not hit the 786, which means we're on alert for what's called a Gartley pattern. I then want to take my Fibonacci extension tool and drag it from the swing low of A to the swing high of B and back down. And you'll see that 127 extension right here is going to be our D completion for the pattern. Pain-free. You can see it rolled right down. Our targets were the 382. Zoop. Smashed targets easily. Got us a little money to end the week. Now, we have the same thing happening on a higher time frame. So we bounce one more time frame up to the 4 hour, right? We've got the same exact thing happening, just a little bit of a different Fibonacci ratio. So we'll do it again. This is going to be our X, our starting point. This is going to be our A, our first swing low right here. I'm going to take my Fibonacci retracement, measure it from the swing high, the extreme, to the swing low right here. I'm going to ask myself the question, where does this B leg come to? Well, the previous one came to the 618 and did not hit the 786, which meant we were on Gartley alert. This one comes to the 50% and does not hit the 618, which means we are on, say it, bat pattern alert. That was weird. I got an even weirder podcast coming up for you guys. I think episode 982, where it's just, don't judge me when you see it. Just don't judge me. May delete later. Anyway, so we're on bat pattern alert. So the bat pattern, we know that the completion zone for the bat pattern is going to be our 886 right here. So if price were to come up to this zone, our 886 being the D leg, the zone right here to the X being the completion zone, or as some call it, the kill zone. Right, throw cheese at me. This is a nice area to look for a bearish move, just like we saw before. So a nice pattern opportunity here on pound dollar. Now, time for the most painful trade Akil has ever taken this week or this month. And it's very similar to what happened on pound dollar. It's going to be here on the euro dollar, which I absolutely hate. But here's what we had. So about 15 days ago, I entered a trade on the euro dollar. You probably remember this from one of our videos here, right? It was a pattern that looked like this. I'll show it to you. X to A, swing high to swing low. A to B right here, 50%. What type of pattern are we looking at? Bat pattern, yep. B to C, and then a C to D right in here. And the kill got filled right below the 886, as I usually do. And you can see the market didn't do much after that. In fact, and I'll draw my targets on so you guys can see the pain that I took. Price action just consolidated and went sideways for day after day after day after day after day after day after day. And then finally this week, right, after treading water for like 15 days, I woke up to saw that we finally broke lower. We pushed lower. We broke structure. And money was going to be going into my pocket. And then I looked at it and it just missed. It just missed, right? It hurt so bad. And I did not hit targets here. Now I know what you're thinking. Akil, close enough, right? Close enough. No one is looking. You could have just done it. No, I couldn't have just done it, right? Because that would be a mistake. And we always talk about process over outcome, the 4 type of trades: wins, losses, good, bad, right? The lesson that I learned in my career, and this is actually what turned my trading career around, is that taking good trades, meaning trades where you follow your rules 100%, you don't make any mistakes, bigger picture is more valuable than an individual win, right? An individual win right here would have done absolutely nothing for me, right? It would have given me some money, but out of the whatever billion trades I take each year, doesn't really make a big dent. However, a bad trade, a sabotage, the hard part about that is that one sabotage leads to another, right? Like if you do something bad and you get away with it, then what do you do next time? You're like, I'm going to do it again, right? And you keep doing it, you keep doing it, you keep doing it. And then before you know it, you form these bad habits. Bad habits are very hard to break, and bad habits in trading ultimately lead to destruction. It doesn't seem like it, right? Because the saying, you can't go broke taking profits, which is a stupid saying, by the way. You can challenge me on that if you want, but it is completely stupid. You need to change your mind if you're thinking that way. I'm not calling you stupid. I'm just, the saying is stupid because it's a mindset thing. But you got to take good trades. So I was not able to collect profits here. I do have a close enough rule, so I was able to take my stops and roll them down to break even. So at least I had the well-being of knowing that I couldn't lose money. But it stinked watching this on Friday as it came back up and took me out for break even, right? Again, probably a net loss, actually, if you look at the rollover cost and all that fun stuff. But you look at sitting in a trade for 15 days and then being able to get nothing out of it, it's very painful. And then what happened after that is, you can see, right, we came right back and fired off another pattern. If I look at my X to A, swing high to swing low, we're going to have another bat pattern similar to pound dollar. X to A to B, B to C, C to D right up here. So not only am I sitting in a trade for 15 plus days, not only am I just missing targets by literally a few pips, not only am I getting stopped out for break even after investing all that time, energy, and mental stress into this trade, but now I got to do it again right away. That's like that's like falling off your bike, hurting yourself, and then getting right back on your bike and needing to ride again, which is kind of hypocritical because my youngest just learned how to ride his bike, and we just went through the whole thing where it's like, yeah, you fall down, you got to get back up. So I hope he doesn't hear me saying that. You're a liar, Dad. But now I get it. Now I get why it was so hard for him. I'm telling him to do exactly what I'm telling you guys to do. But fact of the matter is, rules-based, process over outcome, we follow the plan. It is okay to be emotional as a trader. I was speaking to a few traders the other day about emotions in trading, mindset, psychology, and the fact that, hey, we don't have to be emotionless robots. The difference is we can't let our emotions affect our decision making, right? We can cry and yell in the pillows all we want, but we got to do what we need to do on the chart. When it's game time, you got to get out there, and that's the difference. So I did not want to take this trade. I was not looking forward to take this trade. In my mind, all I saw was I just missed on the way down. Now I'm going to go short again, and I'm going to get stopped out on the way up and you know, have a horrible end to my trading month. But follow my rules, because that's what I'm supposed to do, and ended up getting a little money out of this, which was good. So it's a great lesson on process. There were a few traders on the platform that took that, and this was hopefully one of those game-changing lessons in their life where they can see that even when they don't want to do something, if they just do what they're supposed to do, it will be beneficial to you. So that's your lesson for today. If you like the video, hit that like button. Again, subscribe if you're new. That way you don't miss all the gems that I put out during the week. Hope you guys have a great weekend. And until next time, plan your trade, trade your plan. Akil, out.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.